Are you going to have to buy the dip on Peloton stock again after dropping a whopping 24% in the after hours after reporting earnings that are really disappointing investors? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are having a great day, and I really hope I can provide some comfort if you happen to be anywhere near Peloton stock. This stock during the regular trade was down 4.27%. In the after hours, we're seeing this stock trade off over $20 per share, down over 24% on this one. Look, year to date, before the 24% drop we're likely to see tomorrow, stock was already down 40%. That means tomorrow we're looking at a 60% decline in Peloton Interactive. Is this a buy the dip opportunity? Again, I tell you what, we'll look at it from a technical perspective as well. We were holding this $81 level at Peloton. In fact, at the close today, we were at $86 per share on this one. This $81 level was a hard level of support. And when we broke it, boom, it was like skydiving without a parachute. We fell all the way down here to $63 per share on this one. And this stock continues to drop. It's now down 26% in the after hours. Shareholders are absolutely dumping on this stock. And we'll talk about why here in a second. We'll get into these numbers. We'll dissect them. I remember last quarter we called it a hot mess. This might just be a straight dumpster fire when you look at these numbers over at Peloton. Now, the Q1 came in. They missed on that EPS side. I don't know if anybody's buying this for EPS, but take a look at this revenue, just up 6.2% year over year to $805 million. That missed street expectations. But I think I actually know what investors are really puking at is the fact that they guided for full year revenue in the upcoming year between $4.4 and $4.8 billion. The street was at $7 billion consensus. That means some people are even higher than that. Maybe even twice as high is where Peloton is going to come in on the revenue side for the upcoming year. It is absolutely a smoking hot dumpster fire over at Peloton. And I want to preface this by saying I got a Peloton. I like Peloton. I've been in and out of this stock before. I don't currently own any shares of this stock, but I like this company. I like what they do. Okay, when I come on here and eviscerate companies, people take it personally. I do not care about money's feelings because money doesn't have any feelings. And so here on the Investor Channel, we don't care about offending money's feelings. And Peloton is doing a great job, absolutely a great job of torching money and torching an investment. And so we have to call it what it is, despite our personal feelings about this company. I'll even be on my Peloton probably an hour from now. So I really like this company's products, but the stock has been absolute disaster over the last couple of quarters. We see our connected fitness subscription. This is and will be the bright spot. I'll show it to you from a financial perspective as well. That is holding up nicely. Unfortunately, take a look at our quarterly revenue. They're going to have to remove this graph from the top of their press release. This is near the top of a press release. I tell you what, I'd replace this with one of those pretty models that you have running on the Peloton. Maybe Maddie Majacomo's face right here would be a little bit better than this because we peaked out at $1.2 billion worth of revenue, and we've been on free fall ever since then, down to $805 million. This was after lowering the price on a lot of their products over the last quarter, which I think some investors thought would spur some demand. We actually did not see that. We're seeing average monthly workouts decline. In fact, go back to levels we haven't seen since last year, and we see quarterly workouts just on the decline despite more connected fitness to subscriptions. Believe it or not, I don't care. If you subscribe to Peloton and you don't want to ride the thing or do anything in the app, I don't really care, but it is hurting this company's statistics and their revenue to a certain degree. Now, what's absolutely blown up our revenue is the fact that these connected fitness products, this is the bike and the tread. Obviously, the treadmill ran into a lot of problems. I think they've gotten past that to a certain degree. There's probably a lot of negative goodwill based on that product. Now, they lowered the price of their bike, and we've seen that margins just got absolutely obliterated, but it really did nothing for sales because look over the last year on this on a 3-month basis. We went from $600 million worth of sales. This is on the bike. This is the treadmill. In fact, this is the majority of the bike, okay? I think the executives executives indicated that the treadmill is a small product for them. Like it's 5 or 10% of revenue. It's not really that much. So the bike is just not selling. It went from 601 down to $100 million to 501. And sure, some of you might say, well, it's supply chain related. It's this, that, and the other. Well, I'll fast forward up to our balance sheet over at Peloton. We're kind of breaking form here, but I want to show you inventory over at Peloton right now at the current time is sitting at $1.2 billion. They have almost as much in inventory as they do cash. Take a look back in June of this year. They had about $1.5 billion worth of cash. Now they have about $1.2 billion worth of cash, and they've bolted on about $300 million worth of inventory. So they have inventory. Peloton has bikes to sell. Peloton has product that it can be selling. People are just not demanding the products like they used to. Now they are demanding this subscription product, and I love this. Take a look at this. You went from 156, you nearly doubled it to 304 on that revenue side. That did help our total revenue increase a little bit. You went from 757 again up, I think it was 6% on that revenue growth. Yeah, 6.2% revenue growth. Again, not that great, but you did double that subscription side. And the reason why I like that subscription side is take a look at the gross margins on that. So here's our cost of revenue on that subscription. We only had to pay $101 million to make 304. Hello, maybe Maddie Majacomo should be asking for a raise because they are making tons of money off that app and the subscription, as you'd expect, right? They sell you a $2,000 bike, but then they charge you another $40 a month to run the subscription. I mean, this is an affluence person, company, and product, and people are willing to pay for it. So we love the margins on the subscription side. I think some investors are probably likely nervous, though. They're seeing that, hey, maybe these connected fitness subscriptions, this will start to flatten out. We're also seeing people not necessarily use this product as much as they did in the past. Look, I know we were all locked down in Q1, Q2, Q3 of last year. Everybody was working from home. Gyms were closed, all of the above. We weren't traveling, all that type of thing. Look, I get it, okay? But despite the growth in our connected fitness subscriptions, people are working out less. That is a problem because eventually, if you're not using the app, you're probably going to cut that subscription off, and it's absolutely juicy margin. So our total cost of revenue, I want to highlight, though, the fact, look at this connected fitness products. We spent $441 to make this 501. We're basically giving those bikes and those treadmills away from free, okay, from the cost of revenue side. Look at last year. This is what attracted so many people to the Peloton stock. I mean, this stock was like $17 before the pandemic started, and it went all the way up to $168. And even if you had bought it down there and you'd gotten up here to $80, even where it's at right now, $62, you're still winning on that. And the reason why investors really liked it in the past is because you actually had a high margin product combined with a high margin subscription business. Now you flipped it a little bit, okay? That subscription business is still very, very high margin, but the connected fitness products, you're basically giving these things away. Like I said, you spent $441 to make 501. Previous period, we only spent $364 to make 601. So we spent even less to get this higher revenue. Really bad from a margin perspective. Our gross profit, as you would guess, went down. We went from 328 all the way down to 262. So despite the revenue growth being in our highest margin business, the subtraction of the margin we get from selling the products took a hit on that gross profit. Again, we went from 328 down to 262. I want to puke. And why do I want to puke? Well, we don't have if we had a $27 million valuation, even a $270 million valuation on this stock, well, we'd be having a whole lot better discussion. We'd have a completely different discussion. Hello, friends. We have a 27 billion, 27B with a billion for boy, billions, balling valuation on this one. That makes these numbers make absolutely no sense. You're only carrying 262 gross margin and you have a $27 billion valuation. I don't even want to do the math on what that is from a valuation perspective. And guess what? We have other operating expenses. We have selling and marketing, which more than doubled. Hello. Oh my God. That's really bad. General administrative, again, more than doubled. Ooh, I want to puke. Research and development, doubled. I don't really have a problem with that. I think we should be releasing a few more products over at Peloton, maybe ones that are safe and don't kill people. That made our total operating expenses for the quarter $622 million. Guys, we were at 260 a year ago On a quarterly basis, these have almost tripled. So you bet our loss from operations went from a profit of 68 million. Again, this is what people liked about Peloton last year. You had a high margin business on the product side. You had a mega high margin business on the subscription side. And not only that, all your other costs fell in line. You were churning out a profit. The story is changed. And so this is when people ask me in the comments all the time. And this is why it's really good that you watch this video, even if you're not in a Peloton, okay? This can happen to any stock. I don't care who it is. It can happen to Apple. It could happen to Amazon. Certainly, we don't necessarily anticipate it happening with those mega cap stocks, but it can happen. And when do you cut bait on a stock? Do you ride it from this $128 level all the way down to 62 just because? No, you sell because the story has changed over at Peloton. They're no longer a high margin business on the product side. They are no longer keeping their cost in check. They are no longer profitable. This is when you cut bait, and you really should have done it 3 months ago. I think at this time, you're probably more looking to cut bait on this one than actually add to your shares or buy the dip on this one just based on these financials. It is absolutely just atrocious, in my opinion. From a cash flow perspective, you bet it doesn't pay any better story. You pull down this negative $376 million worth of net income. Last year, like I said, we were sitting at about $70 million worth of net income. We had positive cash flows last year of $312 million. Now we have negative cash flows of $561 million. In a quarter, you just had negative $561 million worth of cash flows. And I want to remind you, we have barely, and not, you'd have to count accounts receivable on this, barely $1 billion sitting on our balance sheet over at Peloton. This is a company that is going to run out of cash very quickly. Now, am I really concerned? Am I thinking they're going to go bankrupt? No, they're going to pull on some bank debt. They're going to sell the shares of this company. They're going to have to do an equity investment. They're going to have to do a convertible note. I don't know what they're going to do over at Peloton, but they're going to have to raise money. Okay, period. End of story. And more than likely, maybe they take on some bank debt. I think that would be the prudent thing to do, is go take on some bank debt. You have some inventory. You do have some sales. You have subscription. There is a bank that will lend this company money. But more than likely, my guess is they'll do a following offering on the stock that will dilute you tremendously as a shareholder. And that will be a very, very, very bad thing. We actually see just the weighted number of shares outstanding over at Peloton has just continued to rise. They're going to have to issue more shares in order to raise money. This company is in deep trouble financially, and not from a bankruptcy perspective, but from a continuing operation perspective. They're going to have to raise money. I think they're going to have to do it with selling the stock. That's why, from a fundamental perspective, I don't think this is a good buy the dip opportunity. The story has completely changed. On top of that, you still have a $27 billion valuation. I know this doesn't factor in a 25% drop that we'll see tomorrow, but still, take 50% off of this valuation. I don't think you're anywhere close to a good value stock. Now, from a technical perspective, this $61 level makes sense. This is where the stock hung out from July of last year until about, really for a month or two. That's why these levels are incredibly flimsy at these levels. This stock is like a hot knife cutting through butter. And quite frankly, wouldn't surprise me if we come down here to 45. Wouldn't actually surprise me at all if we retrace all the way back to the highs we made before the health situation, all the way down here at $35 per share, especially if they start announcing following offerings, debt offerings, convertible notes, warrants, any of those types of fundraising activities. I think we'll have investors selling this stock even more. And from a valuation perspective, this stock just makes no sense. The story has changed over at Peloton. If you have a stock in your portfolio where you bought it for one reason and now the stock is doing another, that is a signal to sell. Even if you have to take a loss on those stocks, I'd rather pull my money out of a struggling stock like Peloton and go put it into a company that is likely to outperform in the coming year ahead. Based on this market cap and based on the environment that Peloton is operating in, I wouldn't bet this stock would bounce back anytime soon. That was Peloton. Hopefully you guys had a great day. Good luck with your investments.